Fiscal year 2024 has been a challenging year for us, and we anticipate that these challenges will continue into fiscal 25 as we focus on rebuilding Nissan.
Japanese car giant Nissan Motor has posted a net loss of 670 billion yen, that's roughly $4.5 billion, for the financial year ending March 2025.
Nissan's revenue was 12.63 trillion for the period, down 0.4% year over year. Although revenue remained flat, operating profit decreased to nearly 70 billion, impacted by lower volume, a weaker mix, pricing pressure, and increased costs. As referenced in April, these financial results include impairment charges of over 500 billion and restructuring costs of close to 60 billion. Combined, these items, along with the release of deferred tax assets, resulted in a net loss of 671 billion.
A massive fall compared to a profit of over 426 billion yen the year before. A telling downfall for a company reeling under a severe financial crisis.
We have a mountain to climb from the losses we are announcing today. As our path forward, the Nissan Recovery Plan is an action-based, grounded in reality and driven plan by determined actions.
Weak sales in critical markets like the United States and China have been key factors. In fact, these two countries, which form the backbone of Nissan's global sales, saw a significant drop in vehicle demand. Add to that, massive impairment charges as Nissan reassessed the value of its assets in North America, Latin America, Europe, and even Japan. The company also suffered from rising operational costs and had to write down the value of various assets. Together, these factors crushed profitability. Nissan's operating profit, which reflects its earnings before taxes and other charges, was just 69.8 billion yen or around $472 million. That's a tiny margin for a company of its size. The company announced a total of 20,000 job cuts, bringing the total to around 15% of its global workforce.
As part of Nissan, we need to implement further workforce optimization, primarily driven by our plant consolidation efforts. We are aiming for a revised global target of 20,000 people by FY27, with roughly 65% coming from manufacturing, 18% from S&G&A functions, and 17% from R&D and mostly contractual staff.
It's also shutting down 7 manufacturing plants by 2027, reducing its global factory count from 17 to just 10. While the company hasn't specified which factories will close, this is clearly part of a wider restructuring strategy to slash costs and boost efficiency. At the helm of this turnaround is Nissan's new chief executive officer, who now faces the tough job of pulling the company out of this mess. Adding to the challenge, Nissan's much-anticipated merger talks with Honda have collapsed. If that alliance had gone through, it could have helped both companies tackle shared issues like high R&D costs, evolving technologies, and global competition. But with talks off the table, Nissan is now left to steer through the storm alone. Nissan has decided not to issue any financial forecast for the year ending March 2026. The company says it's still trying to understand the full impact of current issues and the broader market conditions. The crisis isn't just hurting Nissan. French automaker Renault, which owns 36% stake in Japanese firm, said it expects the 2.2 billion euro hit, that's $2.4 billion, in the first quarter of 2025 alone, thanks to Nissan's restructuring plan. Renault had rescued Nissan back in 1999 when the company was on the verge of bankruptcy. To make matters worse, Nissan has also flagged the possible impact of fresh US tariffs.
If you remove tariffs, Nissan should be break-even this year, FY25. So what's really dragging a lot of the results in 25 is the tariff impact. Yeah. Now, we're trying and running to find countermeasures for the tariffs. And so far, we have found that we can offset around 30% of the yearly impact of tariffs. But we will keep bringing actions and measures to minimize the impact.
That could make its vehicles more expensive in one of its largest markets, adding further pressure on an already strained bottom line. For more news and updates, keep watching Live Mint.